Good afternoon, everybody. My name is Gaurav Kaushik. I represent MCX, Multi-Commodity Exchange of India Limited. And first of all, I would like to congratulate ET for this MSME program, Regional Summit Indore. And thanks again to ET for inviting and participating with MCX, inviting us for, to share our views with the MSMEs. And the tagline, enabling futures ready MSMEs is very important. We are talking about future. Future is uncertain. And MCX, if uncertainty is there, we need to take an insurance for the uncertainty, be it outward sales time or the inward raw material prices. At MCX, we offer a mechanism called hedging, which acts as an insurance for raw material pricing, because right now the changing global scenarios, the prices of the raw material has become very volatile. So I'll share what the mechanism of hedging is, something about MCX, and how we can best use the exchange for our own, safeguarding our profit margins. Multi-Commodity Exchange of India Limited as MCX started in 2003. We have 2 decades of experience now. It is being governed by SEBI, it's the Securities Exchange Board of India, which also governs all the stock exchanges, namely NSE and BSE, as well as NCDX. All these exchanges are being covered by under SEBI. We commenced operations in 2003. Over a period of time, a lot of things have improved in terms of our product line, in terms of our participants, in terms of instruments being traded on the exchange platform. If we talk about product line, we have product segments like bullion segment, we have a base metal segment, we have energy segment, which includes crude and natural gas, and also agri segment, which has cotton and mentha oil, which are being traded on the exchange platform. In terms of participants, we talk about initially when the exchanges were given approvals, they were only traders, corporate hedgers, and some market participants were allowed to trade. But over a period of time, gradually banks have been allowed to participate on the commodity exchanges. FPIs have been allowed to participate. Now, recently, alternate investment funds have been allowed to participate in commodity exchanges now. So now here is a whole gambit of people who are participating. In terms of, if we talk about, product line in front of products which are being offered. Initially, when we started in 2003, it was only futures. If you wanted to trade on a commodity exchange, only futures were available to trade. Over a period of time, options have been approved by SEBI as well as indices. So now the product basket, the investor and everything is full, and it is upon us as an MSME how we can best take advantage of the MCX as a platform. In terms of regulatory framework, the main regulator is SEBI, and he lays down all the rules and regulations for the commodities and the stock markets. MCX is the major commodity, is one of the biggest commodity exchange in India, and we control around 96% of the market share. Yeah. Now, as these tagline says, enabling futures ready MSMEs. It is primarily involved upon first we are talking about base metals contracts, also known as non-ferrous contracts. It includes copper, zinc, nickel, aluminum, and lead, and they have extensive industrial usages, and they might be available. They are region specific but used pan-India. So even in India, in MCX also, what we are trying to create is like Modi ji says, one India, one price. We are trying to create that thing in MCX. We are trying to create a benchmark prices for all the commodities. Our forte commodity, gold and silver, is a benchmark pan-India. You go to any jeweler, and you talk about MCX prices, he knows it. He will just add his own making charges, and that is the final price. The same success story what we have done in gold and silver, we are trying to replicate in all the base metals contracts. And The factors influencing the market, you all belong to industry, and the factors which in fact the most you have the baseline is raw material. The raw material is, if it becomes volatile, if pricey, it hits on the margins of your balance sheets. So the major factors influencing the markets are, first is economic factors such as industrial growth, recession, and inflation affect metal prices. If supposedly if some economy is going into recession, the demand for that particular base metal or non-metal will go down, and that will hit you badly in your balance sheets of over there. So what I'm trying to say is that exchange has given a mechanism called hedging, which if all the MSMEs use, it will give an insurance to their price fluctuations for the raw material. Then is commodity specific events such as construction of a new production facility. It is suddenly, if the demand remains the same, new production facility coming in, the supply will increase. New consumers, an unexpected mine or plant closure, like for copper, Chile is the major production country in the world. Suddenly, if there is a strike in copper, the prices of copper will go up. And if we are not hedging, and if we have not taken a position on the M6 platform, then it will have really hit hard on our margins, because our selling price, we cannot change it daily. So if selling price remains the same, and if the price are very volatile, the margins will have a hit. So to safeguard that thing, I think we need to hedge our positions on the exchange platform. Then geopolitical events, US-China trade war, it is happening for a long time right now. Again, the most recent is Russia-Ukraine war. It has hit countries very bad. If it is hitting the countries bad, it is hitting the SMEs and the industry also very bad. So, it makes the hedging an utmost important tool just to safeguard our prices, and so that it should not hit our margins and make our books profitable year round. Hedging. So I have been saying this word for almost 10, 12 times now. So now I come to hedging. What actually hedging is? For example, you are an importer and you use nickel for your production in your production unit. The risk for you is, once I have imported, when the material is in transition, suddenly if the price goes down, what happens to me? If the price goes down, at the price what I've imported, my price goes down, I'm having a hit at my balance sheets. So just to safeguard that thing, you need to take a counter position on the exchange. Supposedly, if I bought the material, you need to sell on the exchange platform till the time the material has not landed at your store or at your facility. That is called hedging. So that means I am only taking a price insurance of the material which is in transit, so that even if the price fluctuation happen during the transit, my margins are protected. This is called hedging. This is a very basic value chain with what we are talking about. Say, be it miners, refiners, product manufacturers, recyclers, and it is a full cycle. And each and every one, if you see, it's a market price. So wherever price is listed, wherever price is there, we are at the influence of the market volatility. So what we are trying to say is, it is not necessary that I have to be the initial purchaser or the final seller. It is the whole value chain. If we are dealing in a commodity in which price fluctuations are happening, and if we are not going for a hedging mechanism, or if we are not ensuring our prices for the raw material, we are taking a great risk, which will result finally be seen in the balance sheet at the year end. So just to protect that thing, we need to, and how to protect that, then in that sphere, M6 comes into the picture. It says need for efficient price discovery. M6 is a beautiful mechanism. Over here, n number of buyers and n number of sellers meet up at an exchange common platform and they trade. So, it is not a price of Indore, not a price of Bhopal, but it is pan-India price. A pan-India price which is acceptable to all. If somebody tries to manipulate, if jacks the prices up, sellers will come in the market to bring it down, which is at a neutral level. And if somebody manipulatively makes the prices downwards, then again the buyers will come in the market, and they will make the market neutral so that it will reflect the actual market price. And that is the beauty, which is what I'm saying is actual price discovery. There are n number of buyers and sellers. It is not being controlled by a single or a multiple of people following a cartel. It is not possible on the exchange platform, especially in international commodities. Then comes a platform of hedging, already shared, and a scope of delivery as a last resort. When we started M6 platform, all the products except for gold and silver were not delivery based. All the base metal contracts were not delivery based. At that time, a lot of corporates complained that there should be a last resort for delivery. Now, with the SEBI coming in the pictures for the last 5-6 years, all products except for crude oil and natural gas are deliverable on exchange platform. So even if we want to buy a product on MCX, you can buy and take delivery also. If you feel that this product line which I am using is as per the grade and the requirements of the exchange, you can buy from the exchange platform also. Why we are talking about hedging? This is an average daily volatility M6 aluminum prices. Or if you talk about annualized volatility, 2016 it is around 14.95%. And over the years you would see it is it is hovering around 15 times. Sometimes like 2023 is around 28%. So if the raw material prices are fluctuating 28.15%. You can well imagine how badly it can hit your books. It's simply given an example. If you do an annual turnover of 100 crores, and if the underlying commodity aluminium has a volatility of 28%, you are playing a game of 28% which you don't know whether it will happen to you or not happen. Is God's wish if you're not hedging. So these examples clearly demonstrate the essence and the importance of hedging of a MSME or SME on an exchange platform. Similarly, as aluminium, we have copper. We have done for copper also. Again, you can see from 2016-17 to 2023, the average volatility at the high it went to 30%, and now it is again hovering on 21%. So again, again the same example, 100 crores volume, if the underlying is 21% volatile, we are having at a risk of 21%. So what to do? What is a commodity risk? If we are traditional, we will say, we buy at every price and it can go away. We assume systematic risk. What we lose today, we might make it next time. But it is a good wish what we are trying to do. And it might happen, and it might not happen. And if the person to whom we are competing is hedging, he'll eliminate you from the system, because he is able to mitigate this risk. So manage risk, price risk, and lock raw material prices using futures contract. So at exchange platform, all the base metal contracts, we have monthly contracts, and consequently we have 3-month running contracts. So for example, today we are sitting in July, and if we want to see the price of August, September and October, I can go to the screen and see the price, what is happening at that time. And if I have orders lined up for say October also, I can hedge my position on the exchange platform. Hedging participants. Now, somebody is one of you. All the industry, either is an importer, exporter, or the consumer is a part of the system. Now, if I have given an example of importer, you import, it is in transit. If the prices go down, you take a hit. For the counter is exporter. Now, if I have taken an order and suddenly the prices go up, because I have not purchased, I have only quoted, and my quotation is accepted. If the prices go up, again it's hit my margins. So eventually, what we are trying to say is, if you whatever positions you are taking in the physical market, you need to take a counter position on the exchange platform to mitigate the risk of adverse price volatility. that can automatically safeguard your risk margins and safeguard your balance sheet. What contracts are available on exchange platform? I have already shared aluminium, copper, zinc, nickel and lead. The trading unit over it mentions 5 ton for aluminium, copper is 2.5 tons, zinc 5 tons, nickel 1.5 and lead 5 tons. And the price quotation is in 1 kgs. So, depending upon the requirement and the nature of tenure of your, you want to to book your pricing in the current month, next month or new month, you can take positions on the exchange platform. Aluminium is ex-warehouse Raipur. This is important because in case you want to take deliveries from the exchange platform also, it is ex-warehouse Raipur. Copper, zinc and nickel are ex-warehouse Thane, Maharashtra, and lead is ex-Chennai. These are the primary delivery centers, and one of the most important aspect of these is that all the material which is being delivered on the exchange platform is LME grade. It is not local grade, LME grade materials which are being traded on LME, and the suppliers which are being recognized by LME, only those materials are being traded and deliverable on the exchange platform of MCX. But how is it helpful? A lot of people you might be seeing might be analyzing LME prices, but they are in dollars and the quantums is on a higher side. In India, what we are offering unique is we are giving you a contract which is rupee denominated. So you need not to churn out dollars for hedging. You can just sit down with your own money in rupee terms, you can hedge your positions on MCX, and you need not to go outside India for hedging the positions over there. Similarly, the previous slide showed all the mega contracts. We have launched minis also for the same, because there might be MSMEs who have requirements less than 5 ton of, say, aluminium or lead or zinc. We have launched mini contracts, aluminium, lead and zinc. These are 1 ton contracts, everything remaining the same. But you can, in the multiples of 1 ton, you can hedge your exposures on the exchange platform. Again, the same thing, all are delivery based, and the material being delivered is again LME grade material only. We have also, this is a snapshot of what I have discussed, copper, lead, nickel, zinc, along with your mini contracts over here. We have also got approval for launch of steel contracts from SEBI. Most likely in a coming month we'll be able to launch it. Again, it will be for the terms of quality. It is FE 500 quality of steel. It is TMT bars. We are going to launch TMT bars for trading on M6 platform, and people like who are manufacturers and the builders who actually consume them, they can use the M6 platform for the purpose of hedging as such. Commodities, like I have shared it, already shared, primary delivery center for aluminium is Raipur, but we have a 4, Thane is also there, Palwal, Chennai, Kolkata, all the major trading centers, we have delivery centers for all the commodities, and the major purpose is, exchanges, it is the last resort for delivery. It is hedging primarily happens is that you are only, taking an insurance on your price risk. Once the material comes down to your warehouse or your factory, you scare off your position. But in case you find that the material available on the exchange platform and the prices are way below the spot markets prevailing, you can come to the exchange platform and take deliveries. During COVID, when the transportation and logistics were all standstill, exchange was the only place where all the people whosoever concerned with these material, they booked their prices, they booked their material, and they got deliveries. And that is the confidence people started giving, because the quality of material they got from M6 platform were really up to the mark, and now this will reflect on this thing. Total metal delivered on the exchange platform is 2,83,325 tons. It is divided between all the different commodities, but people have confidence, and we are able to create that confidence and that trust building in terms of among the corporates, that the product available on the M6 platform is of quality and LME grade, and they can use it as such. These are some of the linkages which you can use in terms of spot markets of the warehouse charges, and if you want to come to the exchange platform for deliveries, or even to check about the warehouse and the quality of the material, or you want to check how much stock is lying. We release the data of how much stock is lying every day. It is updated every day, so whosoever wants to check upon the availability of material at the warehouse, they can just click on these links, and you will be able to get the information. I'll end my presentation here. I'll be very happy to take any questions from your end. If you have anything to, any queries regarding the same thing, I'll be very happy to, take queries and answer if possible from my end.
Yeah, hi Gaurav. My name is also Gaurav. Gaurav, you mentioned MCX being in existence, I think, almost close to 2 decades.
Right.
Right. And but I have seen in last 20 years, most of the investor, or whatever you call a speculator, use this platform like just to manipulate the prices. I just want to ask a minor question, basically. What would be the total percentage of your total contracts which you can say reach up to the delivery actually?
It's a very pertinent question. Yes.
Yeah, just to understand, basically,
yes.
just to get
See,
an idea.
Globally, if we talk about global benchmarks, all the commodities on exchange platform, which M6 is a metals and an energy exchange, so all the metals are internationally linked, so it's a global market. So manipulation happening on exchange, especially for the global commodities, is very, very difficult to do. A handful of people cannot do it. Be it crude oil, be it gold. Gold, you cannot simply come and jack up 1,000 rupees or jack down 1,000 rupees. Very difficult because it's internationally linked. We take clues from international markets. Not we, the participants. Be it hedger, be it arbitrager, be it speculator. They take clues from the international market and then they trade on M6 platforms. So manipulation to do, and we do a annual turnover of almost 1 lakh crores. So at a high volume game, if you want to manipulate, it's very difficult. In terms of deliveries, what you have asked, see the global standard, even LME and COMEX, which are US based and London based exchanges, they are very, very old systems in the same regime, and over there it is only 0.8 to 1%. Although we are better than them, as Indian market, Indian psychology is different. If they buy, they want to buy raw material also. I have written in the presentation as a last resort, but some of the people enter the system because it is not the last resort. They actually want to buy it out because if the product quality is good, they want to buy it out. So even then also the delivery volumes which happen is around 1 to 2% only maximum. It is not beyond that because people are here only to risk insurance against their risk of pricing only. If they think at the end that the prices or whatever they're offering on the exchange platform is way below the spot market which they're prevailing, so they might or might not take delivery. That is the only, but eventually it is around 1%, which is the basic norm globally. I hope I am able to answer your query.
Just a small question. So basically you mean to say most of the people are maybe using this platform for price discovery or just hedging their risk, basically.
Yeah.
As you
corporates, yes. Corporates, yes.
Most of the you can say industrial player or most of the investor also, basically.
Yes.
So you can call it speculator or manipulator, whatever you want to say. That's a different
Sir,
thing.
manipulator is a very, very, very hard statement to make.
Hard statement, definitely. I should not use this kind of word. Now most of the people know India is a commodity-starved economy. Now MCX. 1%, only 1% you can say reach up to the final contract. But what you see basically next 3-5 years down the line, how you can participate basically in a meaningful manner, so that more and more people participate basically, so that contracts reach up to the basically final level.
See, you will be amazed to hear, we have a contract called LED, which is trading on the exchange platform. And during the fag end of the monthly contracts, the open interest which is left over there, majority of the open interest, which results into delivery is coming to Indore. People, participants who are using battery, there are a lot of people who, in Indore vicinity who are manufacturing batteries. In battery, there is a lead is used. So if they are finding the M6 prices and comparing with the spot market of particular day, if they find the prices are lucrative on MCX, they are buying it out. And they are not buying it for once or 2 months. It's a regular phenomena. That means slowly and slowly, the corporates or the SMEs are accepting the fact that yes, it is required for hedging. And if need be, if I am able to get a good product of the material at a better price, why not buy from the system? So I think, with the SEBI coming in the picture, confidence has come in the market more and more. With deliveries coming in the picture, yes, more confidence has been there because the prices, the corporates think it is more realistic prices now. And with the number of participants, initially there were only either arbitrageurs, traders, you say speculators or hedgers. But now FPIs have been allowed. It means institutional players have been allowed to enter the market. Mutual funds have been allowed to have exposure in commodities also. So going forward, the volumes as well as the market pie will increase n number of times, and that will also, if the number increases, the actual market, we have seen 283,000 tons of material being delivered. It's a huge quantity. Even in case of cotton, we normally deliver 2 lakh bales. अगर यहाँ पे इंदौर के लोग हैं जानते होंगे कॉटन के बारे में, गांठें होती हैं कॉटन की, तो 2 लाख गांठों का डिलीवरी हुआ है. एक बार नहीं, 2-3 बार हुआ है. So people have trust on MCX and the quality they have in their warehouses, because end of the day it is only the manufacturer or the end user who is going to take delivery from there. Thank you.